This conference will now be recorded.
Good morning, everybody. This is Greg Morton. It is Sunday, August 14th, 2022, and this is the weekend video update for Canslim Growth Stock Investors, brought to you by the Greenville Eastside IBD Meetup Group and the Stockyard Meetup Group. As always, not recommending stocks or securities to buy or sell. We want to make sure we learn first and only then invest. So topics for today, we'll look at the Impactor, talk about what do we see this past week on the indexes, constructive action or destructive action, and also in stocks. We had some mixed days on the index this week. NASDAQ actually had 2 distribution days, but we're seeing some nice strength emerge and intensify in certain sectors. And we're going to look at the weekly charts too on the indexes, which give us a little different picture of the week, I think. The follow-through day is now gaining more traction. More setups, more stocks working. We'll talk about which one was the real follow-through day, which I mentioned last weekend, and we'll look at our educational monthly meetings as well as a special IBD event coming up next weekend. So let's look at the Impactor. As Bill reminds us, this is the most important letter in Canslim, and we always want to diagnose. We don't want to interpret. We don't want to predict. I have no idea if we're in a actual bear market rally or if we're in a new bull market. We'll only know that down the road, so there's no way to predict. I just know we currently are in a rally, and that's the key word. So 3 things we want to look at: action of the leading stocks, and I'm really talking about the new leaders, not the prior leaders back from the 2020 COVID bull. It's rare that any of those will come back to be true market leaders again. So we see improvements this week. We have breakouts that are working. We have viable gap ups that are looking nice, and seeing a lot more setups this weekend in my weekend routine. Look at actions of stocks owned. And then the last thing in order of priority, although it's the first thing I look at on the weekend in these videos, is market pulse, distribution day count, price and volume on the index. So let's hop out of here and do that. Go over to MarketSmith, the daily chart on the NASDAQ, so you can see the trend that's been happening. You can see the subsequent follow-through days marked with these little orange arrows. Here's the original official follow-through day per IBD. Power trend turned on this week. And the last thing we were waiting on is the index could not touch the 21-day, the low had to be above the 21-day for 10 days. That actually happened on this red day. Power trend can't turn on a down day. It's not showing power. So it actually turned on the 11th date. So we have that, extra little wind in the sails is all that is. It doesn't mean go full throttle necessarily. It's just an additional sign of strength. Index is now back above the 20% offline. RS lines trending up a bit, flattened out a little bit this week. S&P 500, and we're going to see this on all 3 indexes. We at least have 3 moving average lines stacked in the correct order and have some nice space between them. So 10, 21-day exponential and the 50-day. Still below that declining 200-day. So big battle looming ahead if it can get up there. NYSE, same thing. 50-day looks a little bit worse. It's still trending down there. Dow, 50 days turned up, same thing in the correct order, getting up there to battle at the 200-day. And then the small caps actually are engaged in that battle. So the Russell there is, retaking the 200-day moving average lines in the correct order, RS line coming up. So we're seeing some strength. Same thing on the S&P 600. It has engaged battle at the 200-day. So let's look at the weekly charts. With the indexes, we kind of start with daily and then go to the weekly. With stocks, we start with the weekly and then go to the daily and try to remember to check the monthly too. So here's the weekly, and this is what is constructive. We've got 4 days up in a row. 4 weeks up in a row, sorry. We have decent volume, at least it's not real low, and decent range closes, nice range closes, high on the bar for the last 3 weeks. So that is constructive. Again, still coming up to that declining 40-week line. who knows, we still can get another leg down, particularly in the fall. October's kind of historically a weak month, so that could happen. But right now, looking good. S&P 500, 4 weeks up in a row also. Nice weekly closing ranges for all 4 of those weeks. NYSE had this little down week, but it's barely down and tight, so not a concern. Same thing on the Dow, just barely down. Russell, strong 4 weeks up in the row, 3 good weekly closing ranges for sure. S&P 600, same thing, had that one little week that was down a bit. So those look more constructive. And if we go over to the coloring book and kind of look at where we are, the buying versus selling days in our 25-day window, going back to the orange dot, I have 11 buying days and 11 selling days. So that trend is trying to flip and go green. And we're getting ready to drop a lot of red days. So hopefully we'll get green there this week. Here's our 2 distribution days on the NASDAQ. Here's the official follow-through day, was back on the 24th. I have asterisks beside that because these follow-through days, there was not going to be enough volume, but it was the annual Russell rebalancing. So in the last 5 minutes of that day, the volume came in due to that index rebalancing. So Bill didn't take that into consideration. He would treat that as a valid follow-through day. I'm treating it as one, but in my mind, I'm kind of going, hey, was this subsequent follow-through day here on the 19th, was this really the true follow-through day? And we didn't have many breakouts in here after this one. Things are better after the 19th subsequent follow-through day. So that's just something to think about. We still have the subsequent follow-through days occurring. I put them in white because they're more than 25 days past the original follow-through day, but I still noted that they occurred. As I said, power trend is turned on. Market school exposure is 5 or 4. 5 is 100%. New highs versus new lows on the NASDAQ and the S&P 500 are green. So we're just seeing a lot of constructive stuff trend lines. And of course, all the MMTS, all 6 indexes are strongly green. So still in a war. We do have the Fed minutes this week, so we will see how that goes. And you can see we've been having more breakouts, which are in dark green and underlined. And those are only Canslim stocks when I talk about valid breakouts. So those aren't losing money or anything like that. They would at least be profitable, have Canslim earnings and sales, and be set up and breaking out of a pattern or early entry if I happen to have that marked. And then go back over here, group teaching portfolio, scaling back in, still 41% invested. The only full position is TAN. And then we have a couple more that are listed there, up nicely for the week, but still just barely up for the month, and down 10.6% on the year overall. Still sort of a tough environment, I think. So let's go back over here. We did that. We talked about, just sort of my thoughts on maybe when the real follow-through day was. Current market analysis, new growth stocks definitely got more traction this week. Solar stocks are still shining. Of course, that's legislation aided and had a beautiful viable gap up in phase. We see potential showing in medicals. Shockwave, beautiful gap up just like in phase. Chip related, including chip equipment, we're seeing some strength. We're going to look at some charts in some of these areas in just a minute. And then oil and gas is quietly and yet massively recovering, building new bases. A lot of those in the IBD 50 this weekend and the growth 250. So we're going to see. Maybe we're going to have a cold winter and gas prices go back up. Earnings seasons mostly wrapped up. Any disappointments were still severely punished. The old leaders were punished, Shop, Teladoc, Roku. Very important, again, to be looking for new leaders, new names, ones we may not even be very familiar with. And we see viable gap ups working. We've got 3 now in phase, Shockwave and Celsius, which is the beverage maker. So kind of reminiscent of Hansen, natural beverages, which later became Monster in more ways than one. And then EPS season is pretty much wrapped up, officially ends on the 15th for companies that have a fiscal calendar year reporting time. There's always earning points trickling in because some stocks don't have a fiscal calendar, so they have their earning seasons going on. Retail stocks are like that. They don't want to end their fiscal year on December 31st, so they switch their schedules up. So this is a big week for retail. We got Walmart, Home Depot, Target, TJ Maxx, Lowe's, Kohl's, BJ's, and Ross stores. So we're going to hear a lot about the health of the consumer, which ties in with inflation. So it'll be interesting to see what these companies say, what sort of supply chain issues they have, what sort of excess inventory buildup they have. So my current market view, I think it's still a green light. I think it's appropriate for me to be increasing exposure if existing holdings are working, which they are currently. Still want to proceed with caution and discipline. Weekend routine remains critical. We do almost all our work when the market's closed, actually. No chasing, honor your written sell rules, and just adhere strictly to Canslim stock selection criteria. Bear markets or tough markets like we're still in, even if it's an early bull, they're unforgiving, while strong bull markets cover up your small mistakes. This is still a tough environment now. Somebody on a podcast or something recently said, hey, in 2020, I think it was on IBD Live, the guest Friday, said, you really didn't even need any rules. You could buy about anything and make money in the COVID bull market. Things were so strong coming out of that in April 2020. But now it's definitely different, and we want to follow our rules at all times, of course. So my current market analysis, this is my slide for the weekend. Green button still on. We're seeing progress, kind of like game time, getting a little excited, college football coming up. Still want to pay close attention. Let's not get reckless. So, and I still have a question about quantitative tightening. I mean, the Fed in January said, okay, we're going to do this later this year. So they knew what they were going to do. And then in May, they said, here's exactly what they're going to do. They gave us the details in early May. They said, starting in June, we're going to, let me get out of here and go to the spreadsheet where I've summarized it. Oops, wrong one. This one. So they said, starting in June, July, and August, the first 3 months, we're going to cut $47.5 billion per month. 30 billion off the balance sheet, 17.5 billion off mortgage-backed securities. So that's taking liquidity out of the market. It's quantitative tightening. It's the opposite of quantitative easing, which started big time back in the financial crisis bear market. And so they said, this is what we're going to do. And the way we do it is the first 30 billion that is comes off the balance sheet, redemptions, whatever, however that works, is not going to be reinvested. We got to get 30 billion back before we put more in the market. Same thing on mortgage-backed securities. Until we get up to the cap of 17.5 billion, not putting more in. So they knew what they were doing. They laid out the schedule, and then they said in September, every month we're going to double it. It starts doubling, so it goes to 60 billion plus the 35, goes to 95 billion total per month. But in reality, in June, when you look at their actual data as they reported it, they didn't cut anything. They cut a little bit off the balance sheet. They went up more on mortgage-backed securities. So the target for the month was a cut of 47.5 billion. They went up by 385 million on a net basis. So they missed the target by more than 100%. I mean, I thought that only happened to husbands and dads. We're only ones that can be more than 100% wrong. But the Fed missed that. And then in June, they, only cut a total between the two, because mortgage-backed securities went up, of 15.4 billion. So instead of 47.5 for the month, they only cut 15.5. So if you look at just the first 2 months, the Fed was going to do 95 billion total between the 2 months. Cuts were only 15.1 billion. So they missed by 79.8 billion in the first 2 months. They only cut 15.4% of what they said they were going to do. Seems about right for government work, I guess. And then in August, they have so far taken 10.8 billion off the balance sheet, but mortgage-backed securities are up again by 189 million. And then they're going to double everything starting in September. I don't know. So the Fed minutes come out this week, so we'll see what they say about that. But at some point they're going to do that, and that has an impact similar to increasing interest rates. So it's a tightening. It's the opposite. They put all that money in to save everything during the financial crisis and during the COVID bear market, and now they're reversing all that. So if it saved the market and was great for it, then it obviously hurts it when you reverse that. So it's just something to keep an eye on. I'm perplexed by how that's being handled. So let's go back to this. So here I just put in the groups so you can see some of the strength. These are the 197 industry groups out of the paper. Medicals are in blue. You can see a lot of those, in the top half of the list. Solar is still at the top. We just really have one solar sector. Oil and gas is pink. You can see the strength there. Electrical, semiconductor manufacturers in orange. So you can see some improvement in those, moving up. So that's just a picture of it. So let's jump back to MarketSmith and look at some stocks I threw in here for the weekend. We'll do weekly like we normally. Well, let's look at daily because these show the gap ups. So here's Enphase. These first three are the viable gap ups that just rocket out of there on earnings on massive volume. So this one's up, is holding it, constructive sideways action. Normally they pause after they gap up like that. Shockwave, 4 strong days, triple digit earnings and sales. Volume, again, massive on that earnings gap up. Celsius, same thing, gapped up. Again, triple digit earnings and sales, 999%, 137% on the sales. And then other stocks, so the lithium sector has been strong suddenly. So there's really 3 top liquid ones that are profitable. I don't think there's any reason to look at the other ones in the sector. They're thinner and some of them aren't making money. So building a nice cup, could have had an early entry here on a sloping trend line or this little shelf horizontal trend line or a David Ryan horizontal trend line right there. SQM, this one reports earnings this week, so we have some of this in the group teaching portfolio. Looks like we'll have enough cushion to hold through earnings. Sort of a sloping 3-touch trend line there. And then Albemarle actually broke out this week. Again, nice breakout, up 6%, 57% volume, triple-digit earnings, and very strong, almost triple-digit sales growth. RS line screaming, setting a new high with price. Just very constructive chart. This handle was a little funky, but nice looking on the breakout. And then these are some of the oil and gas stocks. And I just pulled these out of the IBD 50. There were just a ton of them in there this weekend. So these are setting up. These may not currently be actionable necessarily, but just look how many there are. Just do the weekly charts. So that one's a little V-shaped, but triple digit earnings and sales. Matador set up, looks like it's currently in the buy zone. SM, here's another one setting up, getting up close to the pivot. CIVI setting up, triple digit earnings and sales. Devon Energy, which David Ryan had played nicely this whole uptrend. Stage 3 cup, so later stage base. Just got to be aware of that, but triple digit earnings and sales again. So the oil and gas are looking like growth stocks. And then a couple of the chip stocks I mentioned. So here's Monolithic. So good, strong decent Canslim earnings and sales. You got 3 quarters of accelerating earnings growth and sales growth. That's a nice characteristic. Had a 3-touch trend line entry there. It is stage 3, so have to be aware of that. And then ACLS, Excelis. This one's actually the New America stock featured in the paper. So we always ought to be reading that article each weekend as it gives us a lot of detail on a potential Canslim stock leader. They don't all work, but this one's looking strong, a little bit thinner, doesn't have any top rated funds, but still stage 1 cup with handle. So worth keeping an eye on. So we're seeing constructive action there. There's a lot more for you to look at in your weekend routine. I just hit some of the highlights. And then, new upcoming event. So next weekend on Saturday, IBD is going to have its first national virtual IBD meetup group. So it's a free event. You can sign up for that. There's 4 of us that are meetup leaders that are going to be participating and speaking during that, as well as you'll hear from Jonathan Howard, Amy Smith, and Arusha. So that's pretty cool that they're doing that. So be aware of it. You can sign up. I'll put the sign up link on the YouTube page at the bottom of the video. And then our monthly online meetings at the Stockyard. Our next meeting, I moved it to August 23rd to push it past that national event in case people were interested in attending coming up. Register at the Stockyard meetup site. The tuition for the big meeting is $12, but they're recorded. You get the slide decks, links to webinars, articles that I talk about during that meeting. And if you're a first timer, I send you a courtesy copy of last month's meeting. And then here's a list of some of our prior meetings that are important, and people order the recording. I'd spent 3 months writing a set of personal sell rules for Canslim investors, walking through everything from do you use hard stops or alerts, different. And then I shared my sell rules at that time. Of course, we're always tweaking them a little bit in there. And then there's 2 on weekend review. So if you're interested in those, you can just send me an email and I'll shoot you the list and how you order those. The recorded ones are $15 each. So here's the website. So you can follow me on Twitter. And of course, you're on the YouTube page. A lot of educational purposes there. So that's it. You guys have a great weekend routine, and I'm out of here.